SoundHound AI and IonQ, artificial intelligence and quantum computing, two of the hottest investing trends in 2024 and now in 2025. Still two of the hottest investing trends. IonQ and SoundHound AI are in the epicenter of those two trends. But which one of these two is the better stock to buy for investors looking for that huge upside? Is it IonQ or SoundHound? I'll answer that question in this video, putting these two companies head to head across a myriad of financial metrics.
I want to thank The Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now.
Let's start with revenue. And IonQ, to its benefit, is the one quantum computing company that's generating the most revenue. $37.5 million in trailing 12-month revenue for IonQ. SoundHound AI, meanwhile, at $67.3 million. SoundHound AI has been making acquisition after acquisition in recent years, and that's helped facilitate growth for this voice AI company. IonQ, meanwhile, has been gaining contracts with companies and institutions looking to test the quantum computing capabilities and test what is possible. Although major commercial applications for quantum computing have yet to be developed, many companies and institutions are researching this field, looking for that next big thing. Quantum computing could be that next big thing, especially after Alphabet announced its breakthrough with its quantum chip Willow. That really created a lot of enthusiasm for quantum computing stocks like IonQ that, maybe there is something to this technology sooner rather than later. Of course, if you've been following the quantum computing stocks, they have been devastated lately by comments from CEOs of NVIDIA and Meta platforms. First, the NVIDIA CEO, Jensen Huang, said that he feels meaningful quantum computing isn't going to be around until 20 years later, and that sent the stock prices crashing. And then Meta Platform CEO Mark Zuckerberg said something similar, and then that sent the stock prices crashing. But still, even after those two big dips for IonQ stock, it's up by several hundreds of percent after the announcement from Alphabet and the breakthrough in its quantum computing division. So it's still riding high from that initial boost, even though those comments from Meta Platforms and NVIDIA brought down some of that enthusiasm. Meanwhile, SoundHound AI has been winning many contracts with restaurants and automakers. Those are the two segments where its core business is growing from. And you can understand why that's the case. Restaurants for drive-through could save them significant sums of money by replacing human in the drive-through taking orders with artificial intelligence taking orders. But also, it can increase the quality of service it offers its customers because the artificial intelligence can be better trained. It can be trained on all of a company's data, all of the menu items, the menu prices, the data on what two products customers like to eat together or what drink goes best with what product, and offer consumers a better experience. So you have, on the one hand, something that can lower costs, and on the other hand, improve the consumer experience. That's almost a no-brainer for many businesses that engage in this kind of business. So unsurprisingly, SoundHound is gaining significant traction here. It's signing new customers, and those customers are expanding their relationship with SoundHound AI. And then automakers is another no-brainer for SoundHound AI. When you're in your car, it's really not safe to be touching your screens, right? Your phone screen or your tablet screen, whatever device you might have with you in your car. It's really not safe to be touching it. And so if you can communicate with your car with your voice instead of having to touch things, that makes it a lot safer and a lot better experience for consumers if it works well, right? We all have some kind of voice AI on our phones nowadays, most likely, and they don't always work very well. And so the key to this technology is if SoundHound AI can get it working well, it adds huge benefits to both sides of the equation. Now, while the upside is there for these two companies, their downside is also existent. And most notably is the massive losses on the bottom line. In terms of cash flow from operations, IonQ is negative 250%, although improving, and SoundHound is negative 133%, also improving. But still, this is huge sums of money to be losing on the bottom line and unsustainable, to be sure. But these are early stage companies that are expecting to improve these results at a certain point in time in the future. So when revenues grow larger, they become more mature, they digest these acquisitions in the case of SoundHound AI, etc., etc., at some point. But that remains to be seen, and that's a big question mark and a big risk for anyone investing in these two. And so the balance sheet becomes more important. Thankfully, SoundHound AI has $135 million in cash and $40 million in debt, meaning it has way more cash and short-term investment than debt. So it can pay off its debt and still have almost $100 million in cash left over to fund its operations to get itself to the next milestone. IonQ has an even better balance sheet. It has $302 million in cash and zero long-term debt. And given the rapid increase in the stock price in recent months, it has ammunition in stock that it can sell to raise more cash. So these balance sheets are what you would like to see in a company that's losing so much money on the bottom line. You like to see them have abundance of cash when they're losing so much money, because then you feel like, all right, they have time. They have time to get themselves on a sustainable footing. All right, but which one is the better buy? So if you measure them for valuation on a forward price to sales, IonQ is more than twice as expensive at a forward price to sales of 58. SoundHound is half the price, less than half the price at a forward price to sales of 25. It's also more developed and it has already identified major commercial applications for its technology. It already has a strong backlog of orders, customer orders, hundreds of millions of dollars worth, and it's generated more revenue than IonQ up until this point. And so I consider SoundHound AI the less risky of the two. And risk becomes an important decision criteria when you're dealing with these very high risk investments because they both have huge upsides. And I say huge on purpose because it's almost impossible to quantify the upside for these stocks. They can be trillion-dollar companies potentially, but that's highly uncertain. They can also be companies that go out of business in the next 5 years. And so very difficult to quantify the upside, but it is very large and investors can make 10, 20, 50, 100, 1,000 times their money on these investments, but they can also lose it all. And so risk is an important criteria. And so SoundHound AI being the less risky stock at less than half the valuation, if I had to pick between these two, I would pick SoundHound AI as the better high reward potential stock to buy.
Hey everyone, I'm excited to announce that my book is finally available for sale. I've been working on it for more than a year now, so I'm really excited to finally share this with you now. It goes through my framework for evaluating stocks. Some of you often ask why I like this stock or why I like the other stock, and this framework provides you the things that I look at when I'm evaluating stocks. I've added the link in the description below.